Hello everyone, it's Tuesday and in 2026 this means Nifty weekly expiry day. Yesterday, the bulls staged a massive comeback, forming a classic bullish engulfing candle and reclaiming the 25,600 territory with authority. But today is the real test for the market participants. We are sandwiched between an aggressive put writers at 25,500 and a massive wall of call writers at 25,800. With the US markets closed yesterday for President's Day, the foreign cues are silent. This means today's expiry will be a pure battle of domestic liquidity. So will we see a short covering blast to 25,800 or a hero zero trap for the bulls? Let's decode the expiry setup for February 17th. Good morning, everyone. My name is Ajay and welcome to the Smart Edition of Nifty 50 Market Analysis. Today is Tuesday, February 17, 2026, the weekly expiry for Nifty 50 options. Yesterday, we witnessed a textbook reversal that tracked the bears. If we look at the verified NSE data, after a panic of last week, the Nifty opened lower but witnessed strong buying interest throughout the session to close at 25,682. Up over 211 points. This formation on the daily chart signals that smart money used the dip to accumulate the long positions. The Bank Nifty also joined the party, closing near 60,950, giving confidence to the bulls. However, IT stocks like Tech Mahindra and Infosys were still lagging, as the only deadweight on the index. Global cues. Before we jump into the expiry levels, a quick reminder that the US markets were closed yesterday for the President's Day. This is a double-edged sword for us. It means we have no negative news to drag us down, but we also lack a strong global tailwinds to push us higher. The volume in the first hour might be lower than usual, so do not force yourself an entry at 9:15 a.m. Let the price action settle for the first 15 minutes to see if the foreign investors are active or absent. Expiry technicals. Since today is expiry, let's look strictly at the option chain to find our range. On the upside, the resistance is clearly at 25,800. The 25,800 strike call has the highest open interest. The writers are betting heavily that the Nifty will not cross this level easily today. If we gap up and rise towards 25,750, expect profit booking in the first half as the arbitrageurs defend the ceiling. On the downside, the support has shifted higher to 25,600. Put writers have aggressively written contracts here, meaning smart money does not expect the market to fall below 25,600 by expiry. Any dip near 25,620 is likely a buying opportunity. Expiry game plan. So how do we trade this expiry? Here are two scenarios for market participants. Scenario number one, the short covering blast. If the Nifty sustains above 25,725 after 1 p.m., the call writers at 25,700 will panic. This could trigger a hero zero move, pushing the index sharply towards 25,800. Scenario number two, range-bound decay. If we fail to cross 25,750 in the morning, hedgers will likely to keep the index in the tight range of 25,600 to 25,750 to eat the premiums. In this case, avoid buying. Instead, look for credit spreads to capture the time decay. So in the end, today is expiry. Respect the stop loss strictly. The trend has shifted to positive, but the 25,800 wall is real. My name is Ajay and I'll see you tomorrow with a post-expiry analysis. Take care of your capital and your health. Bye-bye.